Hi everyone, hi traders, this is Steve Miley for FX Explained with another one of our regular weekly macro watch. So in here we're going to take a look at the major geopolitical and macroeconomic events that really shaped the week last week and the potential impact of those events going into this week commencing the 18th of November. And it was really around the US-China trade deal optimism that in here that sent stocks higher and that the forecasts are for further gains with this upbeat temperament we have. So the week really kicked off in earnest from Tuesday when US President Trump spoke on trade at the Economic Club of New York with a positive view on a China trade deal, but also with threats of further tariffs if a trade deal was not made, which at that point sent markets slightly lower through the middle of the week. But then Thursday evening saw Larry Kudlow, economic advisor at the White House, signal a deal with China was close, and that sent global shares higher with the US share indices, the major stock averages, the Dow, S&P 500 and NASDAQ went on to hitting all-time highs on Friday. Jerome Powell also testified last week in front of Congress on both Wednesday and Thursday. He had an upbeat account of the US economic outlook when testifying to Congress, but did not signal really the future path for interest rates going into 2020. Turning the attention to the UK, the Brexit Party said that they will not stand in any of the constituencies won by the Conservative Party in 2017 and are not contesting 30 other marginal seats that the Conservative Party could potentially win. This has heightened the risk now of a majority for the Conservative government, and that's certainly increased. And that's been echoed by opinion polls in here that signal a 10-point lead, up to a 13-point lead here from this panel-based poll, the most recent poll we have, signalling now that the Conservative Party could gain an overall majority in the House of Commons, and that is seen as a positive for the markets. So the real outcome from that was a strengthening of the pound, the euro versus the pound here going lower, the pound at its strongest level against the euro in here for 6 months. Elsewhere globally, Hong Kong has seen more violent demonstrations and responses from the authorities, which has had some negative impact through the last week on Asian and global stock markets. But overall, the market kind of shrugging this off, focusing more on the potential for the US-China trade deal to go through in the near term. And also, we've had the ongoing impeachment inquiry into President Trump, which is now removed into the public arena, but so far not really having any noteworthy bearing on financial markets. But this is something that could impact going forward. Going into this week, we have the PBOC, the People's Bank of China, interest rate decision on Wednesday. Plus, we get the minutes from the Federal Reserve's last meeting where they cut rates in October, also coming out on Wednesday. Elsewhere, the data calendar is very light. We also get the Reserve Bank of Australia meeting minutes on Tuesday. And really, the data of note comes towards the end of the week on Friday the 22nd, when we get Japanese CPI, German GDP, and global PMI data. I'm going to wish you all a great trading week. And don't forget to follow us on our YouTube channel and join us again for our next Macro Watch. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.